Good morning. Today is Monday, December 18, 2023. This is the chart before the market opens. There are 5 levels calculated. You can see all 5 levels. Put a vertical line at the close of Friday, the 15th. And this red level here at 469.37 is just the indication of where the market closed on Friday. Nothing has happened. It's well before the market opens. It's a little bit after 8 o'clock a.m. Monday morning, and we will check back later in the day to see if the spiders got to any of these levels, which I'm sure they will because they're currently in the pre-market around 470.68. And when they hit these levels, we'll see how they react and take a look at the tracking log and see what trades were produced. And now the market is closed for the day. Again, today is Monday, December 18, and everything to the right of the vertical dotted line is Monday's activity in the SPY, or spiders, which follows the S&P 500 index. And the levels identified in the spiders every day are the basis for triggering trades in the E-mini futures, or the ES. The spiders came into and hit 2 of the 5 levels that were calculated and put on the chart before the market opened this morning. So these bottom 3 levels are non-factors and just can be removed just to clean up the chart a bit. So how do these trades at these 2 levels play out? So now we have a little bit of an expanded view. At the 9:45 a.m. candle close, the spiders were about 15 cents above this 471.05 level. So an order was keyed in the system to go long with ES contracts if and when the spiders were to come back down into this level and touch 471.10. And if you're wondering why the operating level for activating the trade was 5 cents higher than the calculated level, just go back and look at some of the older videos where this rule is explained. It's not complicated, it just works. So it took only about 10 minutes before they did in fact come down and touch this level. The order was triggered in the E-minis at 9:55 a.m. or so, and a few minutes later they hit the base hit profit target with no problem. And this was the way it was designed. And I'll put a line here at the 40-cent profit target, which corresponds with where 4 points would be in the E-minis. So this was triggered at 471.10, and the profit was taken when the E-minis hit 4 points. So at that point, this first level, the 471 level, was off the table for the rest of the trading session. And meanwhile, in order to go, I should have made this green because this is the indication. I just want to show you this is where you're looking at for your profit target, and the inverse of this would have been a line down here that would have been a threshold for a fumble. Of course, it never even got down there, so this worked as designed. But meanwhile, there was a trigger up here to go short with ES contracts if the spiders came up into and touched 472.55. So yes, that's what the 5-cent buffer applied. And it took some time, but the spiders got there at about a quarter after noon or so. And I'll add the base hit profit target and the fumble threshold level so we can get a better visual. So here we have the green line, which is the base hit profit target of 40 cents in the SPY or 4 cents in the ES. And then the red line is where if the spiders had closed above this on a certain time frame within certain times, this would have been a fumble. It was never an issue because they pulled the profit out long before that. But this is a little bit of a learning opportunity. I'm going to pull up the E-mini chart and we'll discuss it. So here are the corresponding levels in the E-minis. And why is this a learning opportunity? Well, first of all, this level down here is in the bag and is no longer applicable. First time is the best time for these trades. First hit is the best hit. So now we're looking at this 472.55 level in the spiders. When the spiders got to this, it triggered the short trade in the E-minis. So here's the corresponding level. And some may argue that pulling only 4 points out of the ES isn't enough, that an ideal trade in E-minis should be more along the lines of 5, 6, 7 or more points. And yes, 5, 6, 7, 10 points is great. But at least with these specific calculated daily levels, I found that more often than not, when they are hit, there's a roughly 4-point reaction in the opposite direction. And oftentimes, a 5 or 6 point target is not reached. So in the case of these trades, pulling 4 points worked as designed without any drama, and holding for more than that wouldn't have necessarily been as easy. I will say that there is another strategy that I use in certain cases where part of the position is taken off at the base hit target. For example, say 4 ES contracts are bought at a level and 2 of the contracts are sold at the initial base hit profit target. And then the balance of the position, the other 2 contracts are trailed for more points. And this can work wonderfully, and I've trailed an additional 30 points or more on a single trade before being stopped out. But for the purposes of this specific strategy and for the tracking of these trades that I take in these daily recap videos, I'm using the base hit all in, all out strategy because the trades are easier to manage too, especially when the market is moving fast. So with all that being said, the second and last trade took some time. It was nearly an hour before the E-minis pulled back enough to reach the base hit, but 2 trades were pulled 8 ES points out of the market, and all was good. Back to the full day in the spiders, you can see how they respected this level pretty much the rest of the day. They did spike up, touch this threshold. It didn't matter at this point because this level had been satisfied and was off the table for the rest of the day. But just to show how important these are, and as I was saying earlier, the 4 cents works. I mean, this is what you're looking at is a 40 cents in the spiders or the 4 points in the ES. Just tends to be a recurring theme. So here are all the trades after being inputted into the log, and you know where to look to see the profit potentials for multiple contracts if you're using this strategy today. And of course, the daily averages and total P&L percentages. Well, I hope you found this information interesting and helpful. Have a great day.